Good evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for the evening of Monday, the 18th of November, 2024. Well, we still don't know who Treasury Secretary. In fact, about 3 or 4 important cabinet posts have not been filled by President Trump-elect President Trump at this time. We will see who he gets. He's already come out and confirmed he is calling in the Army for deportation of illegals in the country. Could do it on his first day, he said. So you're seeing that. We had Senator McConnell say he has serious doubts that he's going to allow President Trump to just jam these people through with what's called these recess appointments. Rather, I think he's saying that the Senate's job is to confirm them. So I think these two are a bit of a battle for the first time. It's the first time we're hearing him stand up against President-elect Trump. Should be interesting there. When we take a look at other parts of the market, you've got the U.S. housing starts and building permit data that's coming out tomorrow at 7:30. Redbook Group will come out with their retail sales at 7:55. And at the end of the day, you're going to get in the market the API numbers. You're going to get a lot of retailers coming out with earnings reports. So watch that in the stock markets. Now, I did a special report. Maybe we should go there right now. And I should tell you as we're going through this, I did a special report completely different than I've normally done, based on one thing. What has happened over the past 100 years, 50 years, 25 years, 15 years, and so on in the S&P 500 and SPY, obviously. Within 30 days, a whole period from the election, 30 trading days out. It's fascinating. It's probably the most exciting seasonal report I've ever done. And it opened my eyes up to something that I know I want to do. So you might want to take a look at it. It's on our website, www.iraepstein.com. It's in the top left of the website. You can't miss it. It's bright green. It'll take you there. You can also click anytime up here. There'll be an icon if you're on a PC, and that'll take you there. So let's take a look, if we could, at the chart action, and let me get over here. There we are, to it, and talk about things. Oil up today. Part of that has to do, Norway saw an outage. Kazakhstan has seen a pretty big outage, but they're both going to come back on. But that helped kick the market up. And of course, the other thing that helped kick it up is President Biden allowing Kiev to use missiles that can go about 190 miles from the Ukrainian border inside of Russia. So we are opening it up, and Putin's making his threats as usual. He's going to give people that are part of his axis missiles. Well, they have them anyways. Didn't he just move nuclear weapons into Belarus and other areas? I mean, if you get worried about what this man says, there's nothing wrong with worrying about it. That's why we have a military. But all his threats are, you lay down and die, and I'm just going to roll over you. Somebody's got to stand up. And I think that's what we're going to see with President-elect Trump. And finally, President Biden did something to move this. It's interesting that he has 2 months left, and he made this move now. When we look at the dollar, down a little bit tonight, most currencies just waffling right here, but there's important plays happening in them. Tonight in my full research, I pointed out how many markets are losing their bearish embedded readings. I'm not going to go through it all right here. On the S&P, you can see on a weekly close-only chart, the market just hanging in. It's up 1/3% right now to begin the week. You can see how the market has come down, and you've had a little bit of a bounce. The pattern has been lower highs, lower lows, which is a downtrend. Where do you think the support is? Try my good old friend, the line in the sand, the 18-day average of closes. This is the battleground for the market's direction. You're looking at it right now. I'm telling you, you want to take a look at, I hope you do, my seasonal report. And by the way, on those seasonals, they're charts we make. If you like that, just go to the free offer section we have, sign up for them there. We'll send you out an email where you can get them for free and a 20% discount via my hooking up with this Season X for you if you want to try them. But you'll get the free offer, and the free offer will let you use them just as though you have a full membership to them. I've been with them now for a while, and I'm talking a short while, and I've really liked the service. All right. So I'm looking at the market come down here to the 18-day average of closes. That's the zone when you come down, the correction should have stopped at. Now what's next is the big question here. The Bollinger Band, looking back at it, did its job. It contained the rally and the market fell back from there into the neutral zone. And you have corrected, past tense now, you're no longer overbought. You have corrected an overbought market that needed that. So now what's the next move? In the NASDAQ, it's the same thing. For 3 days now, basically you're fighting at that 18-day average of closes. Here too, you were overbought. Here too, the Bollinger Band stopped the rally and you fell back right to the neutral zone. When we look at the Dow Jones, it too got up there and it's correcting. I would not be surprised to see it get down and challenge that 18-day average. And the same has happened in the Russell. I think any way you want to cut it, it's the same story over and over. So what next? That's where it gets interesting. That's why it's a special report. When we take a look tonight at the 10-year notes, the market is correcting an oversold market. It could rally to the 18-day average of closes, but I think it'll have trouble there. And the same thing going in the 5-year note, might want to come back to that 18-day average and have problems there. In the dollar index, if the market tonight loses the embedded reading by this closing under 79 tomorrow, then the odds favor price and the 18-day average are going to make a challenge of each other. It could take days, but that's often what happens unless you get back up and make a new high before that occurs. Generally speaking, it's a high percentage that when you lose that momentum, the market tries to break. The flip-flop would happen here if the euro were getting up and over 21, which it's not doing just yet. The British pound, fully embedded. I see big resistance on rallies back into the 128 and a quarter, 128.56 zone. The trend is down and well entrenched. When I look at Bitcoin, I see the embedded reading, which tells me the market on breaks is still a buy. I'm targeting near the 100,000 level now for Bitcoin. So I think it's still all systems are in a buy mode. In the crude, you've come up, you've had a bear market rally back to the 18-day average. It's got to prove what it could do against that number. Same thing is happening in WTI. The same thing is happening in the heating oil. It's back and forth, but a huge outside day up today, signaling maybe this whole break has run its course and the market's going to try to find its new legs right in this zone before this is taken out again. That's an interesting play there. And as you know, I'm looking for a top in natural gas. I'm looking for this market to start rolling over to the downside. It's what it typically does as you get into the month of December. So we'll see if it's going to pay attention to that. Currently, the trend is up. Higher lows, higher highs. Until it's broken, don't go picking a top. Let the market give you the spots to come in. Doesn't mean you don't look ahead, but you pay attention to all that. So again, if you're interested in seeing this report that I did on the SPY, that's what it is, the S&P and the SPY. Go to our website, iraepstein.com. Look on the left-hand side of it. You can't miss it there. Give it a click. And I hope you enjoy that report. It will go off on Wednesday. So this is very short term that I put up these special reports. You take care.